Good evening and welcome to the Strategy of the Week tutorial for August 9th, 2013. My name is Steve Chappell, the Director of Educational Services here at VectorVest. Last week, our founder and chairman, Dr. Bart DiLiddo, wrote an essay on the subject of payback time. One of the nuggets that I was able to pick out of that essay was that he was telling investors you should really key in on and consider buying high growth companies, companies whose growth rate is greater than even that of the PE ratio. In this case, to shorten that payback time. Given this rationale, it makes sense then to focus on stocks whose growth rate far exceeds that PE ratio. Did you know we have an indicator in VectorVest that can do just that? Well, we sure do, and it's called GPE, or growth to PE ratio, which he also stated in that essay he feels is a far better alternative to something like the PEG ratio. Again, because of that emphasis on earnings growth, which is the true driver of capital appreciation. So let's jump right into VectorVest and take a look. Here we are at the home page for VectorVest, and to get to our first stop or destination today, we're going to go to Stock Viewer. To get there, it's very simple. I'm going to go right up to the top, click on Viewers, and from the Viewers tab, we'll just need to make sure that we've selected Stock Viewer. So I'll push it back off to the left. And so here we are as of the close of business today. And of course, as always, Stock Viewer initially is sorted by VST, or the companies with the best combinations of value, safety, and timing right at the top of the list. So we already know we're looking at a good pond to go fishing in as far as picking up a few stocks. Now, we have a lot of indicators on this spreadsheet, and just a simple scroll off to the right, and we'll stumble across that column called GPE, or growth to PE. And so quickly, let's cover the computation for GPE. Again, what we're looking at here is a stock that's got really good VST rating, an incredibly good relative value, which he points out is in tonight's essay is a very critical decision when purchasing a stock. But on top of that, the earnings growth rate is phenomenal at 37%. In fact, the earnings growth rate is 2.25 times that of the PE ratio of 16.46. And so that's how we get that 2.25 score. The growth rate is 2.25 times that of the PE. So one nice attribute that you see among many of the top VST stocks is that they have a really nice GPE value. But certainly I bet there are some GPE values that are higher than the 2s and 1s that we see here at the top of the list. So we could begin to just scroll down. As we do that, we'll run across a couple of interesting stocks. First one that jumps out at me would be Pilgrim's Pride, coming in at a 3.24, where the earnings growth rate is still well up in the 30s at 35. But the PE ratio is even lower at 10.81. If we look just a few stocks further down from here, we run across FBR Capital. Now this is a more thinly traded stock. However, look at the interesting numbers that we see here. It's got a GPE of 11.45, where the earnings growth rate is the highest we've seen yet at 38, and the PE is at a really respectable number of 3.32. In fact, that's incredibly low. What do you think the payback time on a stock like that might be? Well, of course, we're always dealing with likelihood, but that's the kind of likelihood I'd like to have on my side. A company that's already making a good bit of money at $8.91 a share and is growing it at 38% a year. Phenomenal. But that earnings growth is the key. That's going to continue to drive that earnings higher and make the stock more and more attractive to investors. Now, one might say, well, Steve, then all I need to do is simply sort by GPE. Well, let's do it just to give you a quick flavor for why we can't do something as simple as that. If we click on GPE, remember we're tracking over 7,900 stocks, and some of those of the penny stock variety. And so one of the things that I've learned for sure in my tenure here at VectorVest is that two negatives do not always make a positive. In other words, a company that's already losing $8 a share and is forecasted to lose 13% more is not a company I want to buy for the long term, and certainly I'm not going to get a good payback time on that company. So if we are able to then put in some simple price and volume requirements, perhaps we'll get to some better stocks with still some very widely respectable GPE values. So this led me to the next phase of my research, in that I headed to the next tool, and that's the Unisearch tool. So to do that, I'm going to go right up to the top again, click on Unisearch, and in here we're going to design a search together tonight. You know, I've made a little headway on it, and enough headway to where I want to share some of the interesting results with you, but not enough headway to where I wanted to place the search into the platform altogether. So I'm going to build it with you, and if you'd like, you could of course build it at home and begin to do some research of your own. So the first thing to do is create a new parameter. So we're going to go to stocks, price and volume, price actual, greater than, let's say, $5, greater than or equal to $5. So a custom value of 5. Let's put some average volume requirements in there because we want some liquidity to work with. So we'll go to the next parameter, go to stocks, price and volume, average volume, and let's say greater than or equal to a custom value of 100,000. So just 5 zeros there. Our next criteria, let's focus on only the major exchanges. So I'll go to stocks, filter by, exchange, is equal to, and in value, when you click there, we just check off the ones that we want. So I'll go American, NASDAQ, New York, and of course we'll include the options in there as well. So again, American, NASDAQ, New York. I'll click on OK. And from here, I wanted to begin playing with the GPE field. So I'll click right in parameter, go to stocks, capital appreciation, and then GPE. Initially, we're going to say this only has to be greater than 1. We're going to conduct an experiment, much like any scientist would do, where we're going to vary that number to see if we can find a sweet spot. Now the final thing I did, I just always like to play with this sort. It's one that's stuck with me through the years, and it's even used in Chappell's Champs. I went right up to the top, and I clicked right where it has the sort of VST. We're going to keep VST in there, but we're going to click the drop down, and we're going to go to VST times CI times growth rate. Again, let's place an even higher emphasis on that earnings growth. Let's make sure that with a high CI rating, that we have a stable company, and we still have a good RV and so forth, because we're going to have a high VST score there as well. And I'll simply click on OK. The next thing I did, I said, well, let's give the stock some time to mature. So naturally, I just went back to the most recent confirmed up call, which was on July the 5th. You can see the green box there for the confirmed up, and I'll click on OK. And we could then run the search. And so from here, all we have to do to really begin to look at some performance to see, you know, is there something to these higher GPE levels on the stocks, is to run quick tests. And so I'll go right up to the top. We're going to quick test the top 10 side. So I'll go right up to the top. We're going to quick test the top 10 stocks. And we can see here that with the first basket, well, you know, we did okay. We had 5 winners, 5 losers. One thing that's nice to see is our winners did outperform our losers. We came away with a 3.77% return, which is a little subpar of the market's return of just over 4%. So let's see if we can do better. What do you think might happen if we raise it up to a GPE of 2? Well, that's naturally what I decided to do. So I close out the quick test. Come right in here, change the custom value for the GPE row. And here we'll go to 2. And you guessed it, we'll run the search again. We do have some different stocks in the mix here. So let's quick test them and see what happens. Click on quick test the top 10. Whoa. Well, this was a little bit of a shock to me in that the performance wasn't quite as good, requiring an even higher earnings growth to PE value. So I said, well, you know, I'm not going to get distraught by that quite yet. Let's see what happens if we start to raise it to 3 and 4 and 5 and so on. So let's close out of the test. Let's go right back into value, do a custom value of 3, run it again, do our quick test, and as we place a higher emphasis on earnings growth, looky there, we're starting to actually get a nice return. We're outperforming the market, 4.65 to 4, and we still have about an even win to loss ratio of 5 and 5. So let's ratchet it up again and see what happens. We'll go to 4. Run the search. Quick test. Oh, look at that. 14.95. Now it looks like we're on to something. We have 10 out of 10 winners. And we are tripling, even better than tripling market performance. So let's close it out. And let's see what happens if we go to 5. We'll run it. Quick test the top 10. Even better yet, are you kidding? Still 10 for 10 and 16.21%. Now we're quadrupling market performance. Fantastic. So why would I stop there? You got to go on to 6 to see what happens. So we'll run the search. Now one of the things that's interesting here, I'm trying to return 25 stocks. We are down to just 10 stocks in the market on July 5th of 13 that have at least a $5 price point with 100,000 average volume that have a GPE score of 6 or better. So we're starting to get to where we don't have as many stocks to work with as you might like. But let's quick test them anyway. We'll quick test the top 10. And sure enough, it dropped off there just a bit. So we're losing the ability to sort through the stocks and get higher VST, higher CI stocks, and those kinds of things are beginning to happen. So if we close this out, it looks like our sweet spot is going to be somewhere between 4 and 5. And me being the greedy individual that I tend to be, I just elected to focus on the value of 5 because that turned out to be the best test, at least over the short term, the near term. And so what I did from here is I went ahead and saved the search. So we'll come over here to the left, and I'm going to click on Save. And we're going to save it as, and we'll call this GPE is the key. I'm going to go into my long searches. I like to put all my research in there. We'll save it as a long search and click on OK. So here we have it saved. GPE is the key. Because the next thing I wanted to do was to run this over a longer period of time, mimicking a trading account. So the best place to do that is in Backtester. So I'm going to go right up to the top, click on Backtester. And in here, I've already got a few backtests in there. So I have to click this new button up here at the top. If you don't have any backtests, you may see a little different configuration in there. And you're just going to do backtest an idea. But I'm going to click the new button. Should take us to the same place. And here I'm going to leave the general account settings at the defaults. We're going to use the 100,000. We're going to use the 995. We're not going to use margin. On market timing selection, you may or may not see this depending on the product suite that you're using. If you're a VectorVest real-time user, you should, or if you've purchased Auto Tester, which is an add-on, you should see the market timing list selection. If you do not, we can set you up on a trial by either giving us a call, and we'd be glad to set you up here, or there is a link provided in the views to get a trial for the Auto Tester as well. I'm going to go ahead and click on Market Timing, and I went ahead and chose to jump right to the RT Kicker combo because this has been just a phenomenal timing list. Tends to get us in a little bit earlier, but it's still a fairly prudent signal. And so we'll use that. And so what this means is when we have a green light in the price column of the color guard, and then the 10-day moving average of RT is greater than the 15, confirms that green light, we would pick up stocks with that search that we just created. And so I'm going to click on up, and in the search name, we are going to buy long. I'm just going to come right down to the My Long Searches folder, click on GPE is the key. Remember, that's the search we built together. The next tab is stop criteria. I decided to roll just with the plain vanilla trailing stop of 10%. And oddly enough, with the limited amount of testing I've been able to do so far, it's still held up the best of some of the different variations that I've run. As I click over on more settings, we're going to use a lot of the defaults here. We're going to try to maintain our 10 positions. We're going to jump all into those 10 positions immediately, and we are going to replace stocks in ups. We're not going to be replacing stocks in downs or neutrals, but we are going to replace stocks in ups, so you want that checked. If I continue to scroll down, this is important. I'm going to choose close any open position that was open in a different situation. We're going to invest the average value, portfolio value that is. So we'll use odd lots. I am going to employ the wash rule, just like to do that every time now. So we'll use 31 days, and we'll set our maximum percentage of the average volume to 2. It gets easier from there. So here on automation rules down, whenever we have a confirmed red light in the price column of the color guard, we are going to take no action. However, if a stock that we own hits the 10% trail, we are going to sell that stock. We're just not going to replace it, is what this means. We're not going to buy anything new. Same thing for a neutral or a yellow situation with the RT kicker combo. For our test period, we're going to go back. It's going to allow us to take advantage of the first day, trading day in 2012, which happened to be a confirmed green light, as you can see here. So we'll click right there. Last thing to do is change the name of the back test, and we'll just call it GPE is the key. From there, I'll click on finish and run at the bottom, and all the hard work is done. So now you just get to sit back, relax, and watch the show. All right, fantastic. And look at that. Let me go ahead and clean this up a little bit. I'm going to take off the signals to make it a little more clear for you and ramp this up, enlarge that graph a bit. Look at this beautiful performance, particularly since the beginning of this year. Look at this baby just take off really right before July struck this year. It's really accelerating right now. So this looks like it's a hot little search right now, and just some really interesting performance. If we push this down a bit, let's go through some of the numbers. So for this test, from what turns into January 3rd of 12 all the way up to August 8th of 13, we have 54% winning trades, 60% overall performance, which is phenomenal because we're picking up a 37% a year return, and the drawdown was only 11.8. Very, very interesting. And so I don't think we're at the final solution. In fact, one of the things that I think may be interesting with this type of search is that GPE sweet spot, I think, is going to move over time based upon market conditions and other factors. But certainly as of right now, it appears to be a very interesting little search. So I'll probably continue to do some work with it and use some things like delta or trend and see if I can't really start to refine that search. And I'll encourage you to do the same thing. You know, feel free to set it up on your machines at home, and who knows, you might get some fantastic and even better results than we were able to share with you tonight. But listen, I want to thank you for tuning in. I hope that you've discovered that there is some great potential out there in buying stocks that have high earnings growth. In particular, stocks that have high relative value combination to boot. And those are really, really great high quality stocks to own even for the long term. So thanks again for tuning in this evening, and we hope to see you next week at VectorVest University's Strategy of the Week presentation. Have a great weekend, everyone.